No money to invest? The rich mindset will change your game. Welcome back to Reverse Thinking. Today, we're diving into a little-known truth about investing, especially for those of you who think you don't have the capital to start. Many people, after reading Rich Dad, Poor Dad, understand that financial freedom is linked to becoming an entrepreneur or an investor. However, how we define investing is actually the key differentiator between the rich and the poor. Redefining investing. It's not just about money making money. For most folks, investing simply means using money to make more money. We look at Warren Buffett and assume he's just buying stocks to grow his wealth. But in reality, when Buffett buys stocks, he's doing business, he's setting up a major play. When you chase after stocks thinking you're investing and making money, you might just be speculating and easily getting fleeced by the big players like Buffett. So what is investing at the rich person's level? First, let's redefine rich. It's not about how much wealth you have, but about your mindset. Even if you have nothing in your hands right now, you can still define yourself as rich through your mindset. Investing here refers to our capital. Every decision in life, from money, time, energy to emotions, is a form of investment. For example, networking with successful people is an investment in your future. My understanding of investing is like winning without fighting, meaning deals that only yield profits with no losses. This is completely different from buying a house or stocks and just hoping the price goes up. That's speculation. True investing is when you have a solid profit plan before you even put in the capital. However, I want to emphasize that most traditional forms of investment require capital. Those who say, you can invest even without money, are often talking about playing at investing, not true investing. That's because real investment projects always have a certain entry threshold. The rich investor's mindset and how you can apply it. Becoming the upstream player. Changing your role in the game. To make money with the rich investor's mindset, you need to become an upstream player. This means you have to ask yourself, who am I? When you, the subject, change, your mindset changes, and the entire game you're playing transforms. You can even become the one who creates the game. Consider the example of my friend who wanted to open a restaurant with $30,000. He was doing two things at once, starting a business and investing. The problem is he was using his own money to invest in himself, a super high-risk type of investment. He had to worry about both running the business and investing. This is a form of gambling. Rich people don't do everything themselves. If you had $1 billion, would you still want to open a store yourself? Absolutely not. You'd be thinking about how to wisely spend that money to make it generate returns, instead of worrying about how to make money from starting a business. People with cash have escaped the money-making framework and shifted to spending money to make money. Using other people's money. The power of fundraising. The key to a true investor. One of the biggest secrets of the wealthy is that they often don't use their own money to invest. They use other people's money. Warren Buffett, Jim Rogers, George Soros. Do you think they use their personal cash to invest? No way. They are individuals with the ability to allocate resources and raise capital. When a company grows large, they're no longer starting a business, in the traditional sense. They use the project's name to make money through fundraising. If a project fails, they close the company, and their personal assets remain untouched. The most important skill for a high-level entrepreneur is the ability to raise capital. So how do you invest without losing money? It's by using other people's money. As long as your project can generate profit, every dollar you earn is pure profit. Look at how quickly young people get rich. They often have great ideas and seek out venture capital funds or angel investors. The purpose of these funds is to find high-risk, high-reward projects, because just one successful project, like Alibaba, can make them a fortune. Even government startup support funds, those who successfully get funding are often university professors, skilled at writing proposals and understanding evaluation criteria. Most of these projects might fail, but the losses aren't coming out of their own pockets. Rich people aren't just entrepreneurs, nor are they just capitalists. They play both roles simultaneously. Typically, in the startup phase, you'll lean towards being an entrepreneur, focusing on products and services. Once the business grows to a certain level, you'll lean towards being a capitalist. Investing is essentially producing companies, while fundraising is selling companies. In essence, you're still doing business, but instead of trading products, you're trading entire businesses. If you're starting from scratch, or you're an employee looking to change your fate but lack the ability to raise capital, the only way is to find a no-capital startup project, ideally one you can run as a side hustle. This is precisely the path of online entrepreneurship, especially through personal branding. When you have a large following, you can generate huge revenue without needing initial capital. True investing has a threshold. Don't fall into the serious misconception of waiting until I have money to start investing. What matters isn't whether you have money, but whether you have the mindset and the ability to allocate resources. Successful people like Buffett started investing young, then they built a reputation, proved their profitability, and people willingly brought them money to invest on their behalf. This is marketing and fundraising. Investing and fundraising are two sides of the same coin, they're inseparable. Collaboration is key. We, who have the brains and wisdom to build business projects, can partner with those who have the money to solve our project's cash flow problems. This is a predetermined win-win relationship. Never think that borrowing money is shameful. All great entrepreneurs are fundraising, spending other people's money. Finally, once you've achieved financial freedom and no longer worry about money, learn to spend money at the highest level. That is, philanthropy. Let the first half of your life be concerned with money, the middle phase with investing, and the latter half with charitable giving. If this video offers you 1 or 2 useful insights that make your life a little better, I'll be content. So go ahead, subscribe to the channel, hit that notification bell, and share this video to spread the rich mindset. I wish you all early financial freedom.